Hey, this is Rob Hurst from Hurst & Hurst CPAs and Small Business Advisors, and I wanted to do a quick video to try to explain some of the issues surrounding the tax allocation district vote coming up for the City of Douglas. We've had lots of questions from a lot of our small business clients that we service, and there seems to be a lot of confusion and misunderstandings about different parts of the tax allocation district, how the taxes work. So I thought I'd try to clear some of that up in a video. Normally on an economic development project, what happens, it's run through the Economic Development Authority. Economic Development Authority takes real estate, property taxes, and our sales tax money, usually from SPLOST, and they go out, develop an industrial park, buy land, do improvements on the land, clear the land, put in water and sewer, put in electricity, add roads, curb and gutter, sometimes even build a spec building to try to sell to another industry. Business comes in and manufacturer says, hey, we'd like to put our business in your industrial park. In exchange for us doing that, we want to have our real estate taxes forgiven for a period of years, but we'll bring 100 jobs. And everyone says, woohoo, great, we just got a new employer in Coffee County. Isn't Douglas and Coffee County a great place to live? Well, the tax allocation district, or TAD, is a little bit different in that the tax money is handled a little bit differently. Instead of spending money up front like the Economic Development Authority does on a project, what happens in a tax allocation district is the local government sets aside a specific area as a tax allocation district. In this case, it's the old high school property. Once that property is set aside in a special tax allocation district, then the government says, or a developer comes in and says, look, the government says, if you build a project here, we'll help you with trying to get financing on doing that infrastructure work, but we're not doing it up front and paying for it and hoping someone comes here. So the developer comes in and says, great, you've got this tax allocation district approved. We'd like to take advantage of that. So the tax allocation district allows the developer to come in and take that promise that the city, county, and school boards have all made on the tax allocation district and go out and get financing to do the infrastructure. So the infrastructure they're allowed to do are basically the same things that the Economic Development Authority does on an industrial park, except for building a spec building. So they come in, do improvements on the land, clear the land, put in water and sewer, put in electricity, roads, curb and gutter, any of those things that they need to do to get the site prepared, except for building the building. Now, what the government agrees to do to make this happen is the government commits to taking no real estate taxes on that property, and also agrees to give 25% of the local sales tax collected on that property from the new project. And they let the money from those real estate taxes and that sales tax go to pay for those infrastructure costs. So instead of going out and fronting all the costs like we would on an industrial park, the city says, look, on the back end, we're willing to let you have the sales tax money and the real estate tax money to pay for the project, but you're going to have to go get the financing and you're going to have to build the project out. Now, once the developer comes in, does the project, in this case, they say there will be about 225 jobs. Project goes up, we're now collecting sales tax. Everybody says, woohoo, we got 225 jobs in Coffee County, it's a great place to live. So the difference is in how the allocation happens on the property tax and the sales tax. And that's what's really, the allocation word comes in, and that's what's really happening is the governments are agreeing to allocate part of the taxes that are going to be collected on the project to future payoffs on the financing for those infrastructures. Those costs that are going to be used are going to be the real estate taxes on the project, which will be the buildings, the infrastructure, the land, those real estate taxes, and 25% of the collection of local option sales tax, of the local sales tax money, will be allocated for the developer to use to pay for the financing on the infrastructure. So what's in it for the city and the county and the taxpayers in our area? Number one, the city gets to sell electricity, water, gas to a whole new shopping center. They have whole new customers that need those services. They'll be able to sell those services. Number two, the city, the county, and the school will still collect 75% of the local sales tax and get to spend. So that's your education splost, your splost, your local option sales tax, all the local sales tax will be able to, we'll still collect 75% of that money. Third, the city, county, and schools also will still collect personal property tax, not real estate tax. The personal property tax cover things like inventory, equipment. Those taxes will still be collected on the property. So those are three of the positives from a revenue side for the city, the county, and the school board. Now, the process for this approval is first you have to have the referendum, and that's what everyone is voting on next week. After the referendum is approved, that doesn't approve the project, that just approves the ability for the local governments to do a project. Then the city has to approve the project, the county commissioners will have to approve the project, and also the school board will have to approve the project. And the reason all three of those entities have to approve the project is because they're giving up part of the revenue stream to make the project happen. Down the road, once the financing is paid off on the infrastructure, then real estate taxes will be collected on the whole property, and then also 100% of the local sales tax will still be collected on the whole property. So hopefully that kind of clears up some confusion and misconception on how the project works. If anyone has any questions, you can go to our website and send us an email. I'll be happy to try to answer those individually. This is just for information only. We're not taking a stance that this is a pro tax allocation district or that we're anti-tax allocation district, but I did want to get good information out there so people can make up their own mind. When you go to vote, you're not going to see a referendum item on the ballot for the city of Douglas that says tax allocation district. I think the wording is redevelopment zone, something to that effect, but it's the only referendum item that's in the election. So you vote for mayor, city commission if you have a city commissioner running, and then you also will see this referendum vote. Yes vote on the referendum means yes, I want the tax allocation district. A no vote means no, I don't want the tax allocation district. So hopefully this helps everyone understand a little better. If you have any questions, reach out to us. We'll try to help all we can. Thank you.